Hey there, and good afternoon, everyone. This is Trader Tim from eminimind.com, and today is Thursday, the 18th of October. We're doing a trade recap, kind of summarizing the week, and it's been an interesting week. Um, we started the week where we had these two inside days, and then so Friday, and then we opened Monday, and we were inside this big body candle. And Tuesday, it was important that we broke the high from this candle here, which is the low bar, the 11th. When I say the high of the low bar, I mean the highest price of the lowest bar in the pullback. So we're moving down, 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 down. And once we break the highest price here, of this low bar, the bar that made the lowest price and the move down, that's pretty significant. And a lot of times, it's a two-leg pullback that we get. In this case, we've got three legs where we've pulled back, we bounced, pulled back again, we bounced, only one day, pulled back a third time, and we've bounced. So, not too surprising today that when we pulled back, we stopped at the 50% retracement from that low to high, and closing above the 50% is a good sign. That target is sort of up in between the 50 and the 60 win 8 of the short from high to lows. And when we get into these situations where we have a long below us, a short above us, I try not to get too caught up in the middle. I try and look at, shorting at highs up at the 50 and getting long down at lows at the 50. But it was an interesting day, or interesting last couple days. The candles on the daily chart that close as a hammer can be a little tricky to trade. That was yesterday, Wednesday, because the market moves strongly in one direction and then strongly in another direction. Today we opened up and we were again inside yesterday, which was for the most part inside the prior day. And as we opened up, we failed a short right off the open. And this is kind of the first 15 minutes that I used to get a read on the markets. So the short failed, meaning we broke through it to the upside. And then the long failed. And, when we have a situation that we have an inside day, I usually come into the day a little bit more cautious because, if we're inside, if we're trading in the prior day's range, that means that there was some agreement towards the prior day. And if we come over to the market profile, you'll notice, I'm just going to zoom it in and run it up and down. So here's today where we opened kind of at the bottom of yesterday's value area. We moved higher, almost getting towards yesterday's point of control. And then as we sold off, once we got to the value area from a couple days ago, look at how thin those prices were, meaning we didn't trade very much beyond that. And then price started to move back up. So we've got a number of days behind us where we have a lot of trade occurring. A lot of transactions occurred. 1, 2, 3, 4 days back here. And so when we're trading inside of that range, you tend to get a lot more back and forth as opposed to trending. So I try not to get too aggressive on trades in these types of days because my expectations are a little bit lower that we're not going to get as much follow through. And it's kind of what we had this morning. We had this big range. Here's about the first hour of the day. We moved down, then we moved up. We established the high and low of the first 30-minute range. And so what I like to do is kind of look for shorts at the top of the range or longs at the bottom. So I took a long down here at lows, and you can see we had a little double bottom. We broke the swing high. You'll also notice that we did not touch the short at the time that the long kicked off. We moved up, then we pulled back. The short traded first, then we moved up into the 50% retracement. That happened to be the negative 23% target, so a great place to take a portion of the position off. Then we pulled back, we moved higher, and then eventually, I got stopped out just for a moderate small gain. Not much follow through. So, but even though there wasn't any really much follow through on that trade, there was a bounce from lows. And then we bounced again at lows. And notice what we did here. We traded below the first 30-minute range. Those are the horizontal lines here. Traded below it. Then we traded above it later in the day. Then we came back down through it and traded below it. And that's days where we're all over the place. We're above the 30-minute range or below. I mean, it's very difficult to get in sustaining moves. At least I've found that it's difficult because you've got a mixed bag where we've got traders who are heavily going long and heavily going short, and so by the time the orders dry up, then we change direction and we don't have a very sustainable move like over the course of the whole day. So even though by the end of the day we sold off pretty steadily, like here in the afternoon, there just weren't a ton of retracement setups that occurred. And, sometimes there's, this week in particular, Tuesday was kind of a very patient wait and see day. Yesterday, similar. I just haven't had many trades this week because I haven't been able to get a really good read in the first part of the day. So it's okay to go through weeks with not a lot of trades. And at the end of the week, sometimes taking one or two trades for a small gain, or even taking no trades for no gain, that's better than taking 5 or 6 or 10 trades to try and force something. So, as you heard me say, these consolidation zones, these weeks, yeah, they're tougher, and they're tougher because you have to be more patient and take less trades. And then when the markets are going between a consolidation zone where we're trending nicely or we have bigger ranges, that's when you really clean up and have those big winners. So that's all I got for you today. Next week, another live trading session on Tuesday. We'll see what tomorrow brings. I'm targeting the 50% up here, 2830s essentially. We'll see if tomorrow we can bounce. I want to see if we break tomorrow today's high. That'll be important. If we come down and break the 61.8, we're not too far from this low, 27.12 and a quarter. And if we break the 61.8, if we break today's low, we could really sell off hard and then either rally and form a really, really big hammer or form a big body candle to the downside and have another Dow, down 600 plus sort of day. So that's what I'm looking at the next couple of days, and I hope everyone has a great weekend. And if you have questions, as always, tim@eminimind.com is my email. Have a great weekend. We'll talk to you soon.